Didn't even check the page. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. I just hit the record button. I didn't even check to see whether any of the pages are running or not. But I'm gonna take a leap of faith that Kevin's got my back here today. So I sure hope we're recording. But let's see what happens. Oh, it looks like it. Let's see. A leap of faith that Kevin's. Yay! Thank you, Kevin. Mr. Reliable, eh? Damn fine trader too. So super stoked to have this team behind me. Speaking of which, today is Thursday. And today was baby powder report today. So we had Julian on the call telling us a little bit about what he's seeing in the markets. And oh boy, man, the tension. You can just feel it. You can cut it with a knife. Obviously, partisan politics is a waste of time. Like you're ever going to change any. I mean, everybody's getting so polarized these days. It's, you're either in the blue camp or the red camp, and that's just about it. That's the end of the conversation. So, not only is it heated socially, economics doesn't make a lot of sense what's going on in the market right now. So, ironically enough, our basic conclusion out of our lengthy conversation in the daily brief today was, just put the media away. Maybe check things like public broadcasting if you want to try and get some sort of reliable, unbiased news. But on balance, probably just put all the media away and just trade your charts. Just trade the setups. M's come in, hit them. W's come in, buy them. And just live with the results. But anyway, very enlightening conversation with Julian today. And of course, all of us traders, day in, day out, it's 2020 sure is a tough year here for everybody. So go slowly. Don't take any home run bets. So, if anything, especially with barstool guys like that, the lure is going to be, oh, fuck it, just go all in on this one. And I can't take the stress of this day in, day out chop and grind. Just fuck it, just go all in, and who cares? Just close your eyes and enough of this. And that's usually where people get destroyed in trading and capitalism. So try, if anything, I know it sounds crazy, but I've often suggested, and it's terrible, I'm not going to sell site subscriptions with this, but I often suggest to, especially Joe Sixpack, what the fuck is going on with capitalism, is just leave 2020 alone. And my hunch is probably 2021 that prices will be in and around the same neighborhood that we're in. We might go zooming up or we might go zooming down from current levels, but I don't really see a huge change. Just a shitload of volatility this year, so get ready, folks. Anyway, I like to keep the conversation relatively focused for these free videos. Message really hasn't changed. Almost everywhere, message really hasn't changed. So you could almost just just hit the rewind button and play yesterday's video, and it's probably exactly the same as today's. As I think we're going through a pretty big celestial event here, it doesn't surprise me. I've talked about this at length. It sure feels like we're coming into some sort of fractal apex here on this celestial event. So I'm just sort of biding my time, expecting extreme chop back and forth. And if anything, this image is probably a great analogy of, through this period where we were one directional on the US dollar, it was like, things are good. Barstool guy making lots of money. Look at me, just buy anything. I'll make money, blah, blah, blah. We're not in that kind of environment anymore, eh? Back and up and down and up and down and up and down and up. And we're not really going anywhere. Just a hell of a lot of stress. And actually, it was a really interesting analogy. One of our veterans, he's my TA in the level 3 program. He's trading away the Australian dollar right now, having a lot of fun. And we were trading what we call horizontal support and resistance levels. And what a great analogy of a trader's life, where the pros are just washing levels back and forth repeatedly, setting traps for the public. You think all this stopwashes and all that kind of crap, the funny tweets I put about Arthur Hayes, you think that that's just in crypto? It happens in every market. So, in crazy uncertain times where, traders don't really have trend to work with, and in this case, we're actually postulating whether the downtrend that was existing, and keep in mind, this is a 30-minute day trader's chart, whether it's turned around, you have to understand that these kind of game stopwashes, liquidity hunts through kill zones, this is so business as usual. And it's an interesting pivot. Like this kind of picture leads me to believe that the U.S. dollar index is probably going to come down a bit if these especially these commodity currencies, if they can start rallying a little bit. So what does that mean? Well, I'm expecting the U.S. dollar to hit some sort of apex pivot here on July 1st on a down note. So maybe that's what starts this. Keep in mind, past couple of days, stock market was down 700 points yesterday on this move. Maybe we're going to roll over now and have to come back down into here as that, one proxy in this U.S. dollar index at Australian dollars trying to find some sort of footing. And then back up and then back down. And this is actually what I think is our late summer stock market rally, this move here. And then we set ourselves up for the fall, which I've said all along was really the main event of this year, that this was Act 1. Here we are in Act 2. It's funny how some of the media is like, okay, this is phase 2 of COVID. And other doctors are like, we're not even out of phase 1 yet. So I don't know whether we call this phase 2, but it is the second celestial event of the year. And then our big honking one that I'm really worried about, of course, is way out in November around that damn election. So it's going to be a wild ride here, folks. And we're in sort of that ranging. Are we pivoting here? So we're seeing almost all of the world's assets also sort of ranging and asking whether this is some sort of big pivot here. So, whether it be things like the stock market, we're just ranging here now, asking whether this is some sort of big pivot. It's interesting how the oil market has just been a son of a gun here. And if anything, what I'm almost seeing out of the oil now is maybe this is going to carve out some crazy-ass head and shoulders here. Right, so our buddy David O, he's going to be watching for that move there, which, technically, we said traders might hunt that reload zone that got stopped out. Well, they're probably going to do the same thing again. So I don't know where this ultimate pullback is, but reload shorts, notice there's a little gap right up there, so you can see the head and shoulders thesis starting to form here. And also, too, like we said, U.S. dollar index comes down. Well, that can support the oil rallying back up into reload zones. So that's sort of what I'm watching there. And, of course, like I've said before, this is not a place for Brian to be thinking about being buyer. If anything, I want to be looking for 50% retracements. It's just, it's not. We had a potential top, got stopped out, so now you just have to sit there and wait for the next setup. Interesting how, I do have a few Bitcoin and crypto puts. And then I strapped on a recent stock market. Actually, it was a short ETF, and its trade is just working away now. And interestingly enough, well, I mean, what the hell? I'll just show you. As sort of the ultimate. Theoretically, this is supposed to be the ultimate leading indicator of the stock market. So, hopefully you look at a chart like this and you go, wow, we're right up against top end of the range. Got massive bearish divs. Willie's stupid. RSI's emming out here. RSI did go overbought. So, really, it shouldn't surprise anybody. Gee whiz, Brian's going to go and hit that. But at the same time, too, I don't know whether this top is really solidified. Notice they left a big gap here yesterday. So, and I'm short from up top here. So I wouldn't be surprised, just as we just filled in this gap here today, I wouldn't be surprised if this thing has to go right back up top here. So I don't think this consolidation, this finding this top, this kind of idea, I don't think it's done yet. And believe it or not, this is now looking quite insulated, so I'm feeling pretty good about that. But I wouldn't be surprised. I mean, the market will do whatever the hell it wants to do. But I wouldn't be surprised if we go up through the top. And if we do, I'll be stopped out of my short. So I have, just what I like to do is I like to try and find these very small little risk windows where I can take my shot. And if it goes up to new highs, fine, great. Prove me wrong, all that kind of talk, great. But, as you can see now, I'm feeling pretty good about my short. And really what I'm thinking here is I just want to have a little bit of insurance because, this is the same thing as this. This was technically a V top, so at some point you had to expect that we were going to take some of that back. Well, it's the same thing here. This is a V bottom, so at some point we're going to have to take a big chunk of this back, and I would like to try and sneak my way in and just have some shorts here just in case we do have to go all the way down here. So that's sort of what I'm thinking in the market right now. The interesting thing, though, as you can see on my screen, I still have a hell of a lot of uppie, which is interesting because, I've got some stocks that are actually, my take profit level is right up in here. And you can see even through today's daily brief, I was kind of like, come on, baby, come on, come on, come on. I mean, I'm damn close here. I think I'm sitting up at about 360 or so. So a nice little pop. And look at the internals. I mean, that doesn't look bearish to me. I mean, maybe Willie's skin a little bit. No, not even close to stupid. So, if they want to take the market higher, okay, fine. I'll live with that. I'll keep bringing the register. And, I mean, it's remarkable how many of these stocks we've been in that have all, they've jumped up. I mean, I'm done here. Actually, this one was funny just the other day. I saw that this isn't written up here, but I'm done here. I've got still a few on that haven't run yet, but I tell you, a hell of a lot of these. This is one that I just broke out. I tell you, look at that move here today. That doesn't look like a bearish chart. So, if they keep taking this market higher, okay, fine, I'll keep making money. And just keep spoon feeding stock. But I do like the idea that I am nibbling away on some shorts. And I have very, very tight risk windows. So it's not like I'm risking a hell of a lot of money with my shorts. And as I said just a moment ago, they want to keep taking the market higher. Okay, fine. I'll just keep making money. So be it. But, look how much green is on this screen. That's a hell of a lot of green for a down market. Something isn't right here. Maybe this market's a lot stronger than what the major indexes are actually suggesting. I don't know. That's a tough one. So, there are these kind of places in the market, and don't be surprised if there's a banging out doubles tweet coming on this one pretty soon, because I think I'm long from down here. And I was surprised yesterday. I was sitting there, I think even yesterday in the video I was, and like I said, major indexes, S&Ps are parked. They got a short setup working and they're parked. The oil, actually, I could actually make an argument the oil's got an empire working here. Bang, bang, bang. But, going short down here and having to risk up there, that's a bit much. So I like the idea of hunting that gap. But it's not really like this is like busting out and doubling in price here. And if anything, I'm a little worried about it's being a little late in the rally. The gold bugs, I'd said on that Newmont the other day, I was totally ready to take that Newmont bond trade, and it just never developed. So I was kind of like, I don't know, just I didn't believe that gold. I've got the Newmont on my screen somewhere here. Where the hell is it? Here it is, NEM. Remember we drew out the bot levels and, nice little solid close above here, and we probably have a nice structural floor to work with, and you can see past 3 or 4 days. We actually haven't really done anything for the past 3 days. And, of course, this was all gaps on the way up here, so I didn't really like that anyway. So, just big, not really impressed. And then, of course, the whole thing, right? If the stock market is rolling over in earnest, then we get into the can't sell what I want to sell, so I got to sell what I can sell. So I am watching the Newmont and the gold, but I'll tell you, it's not really overly impressive right now. There's that crazy SRAX. I was half expecting for this thing to pop out through the top here, but, I don't see any reason why that can't happen, especially on pretty good volume here today, so that looks good. Let's see, actually I did a little bit of buying. This is one of Kevin's stocks, TESS. Check out the fundamentals, you very rarely see this. It doesn't really mean that the stock's going to do well, because I have bought really, really well-rated stocks before that have just done nothing. But I was really surprised when I pulled up this TESS. And usually these stocks eventually, they go absolutely apeshit. But this was a really interesting one. Look at this, 8 million shares out, 20% owned by insiders. Okay, debt. I mean, it's not like they're swimming in debt. I would prefer they just pay that debt off. But you can see trading 50 cents on the dollar a book. They've got a bit of a cash crunch here in the short term, but because there's so few shares out, they can do a financing fairly easily. Look at the sales, $540 million in sales. What the hell's going on there? And look at this rating. Analysts, you very rarely ever see this on FinViz. 1 is a buy, 5 is a sell, and they're rating that a 1. So you just don't see that every day. Also, too, this kind of jumped out at me as well. Look at the 52-week range. 19, basically let's call it $20 is your high, $4 is your low. So the stock's probably good for $10. You know, and gee whiz, look, there's a big old gap right at $10 there on the chart. So I'm the type of guy here. You can see the floor at 4 1/8. Actually, Joe, Kevin, we were joking about that. I squeezed an 1/8 in there. See that? I'm still talking like my old timer days. I don't think Kevin's here. Anyway, we were joking about 8s and shaving a haircut 2 bits yesterday. Anyway, oh yeah, he is here. Okay. Anyway, so you know, going in and buying some here at 460 and just risking that, what, 50 cents, about, I don't know, what's that, about 12%? That's not a bad risk for a guy like me to seriously consider. Considering that, you know, we could very easily see $10 on this thing. So I went in and I bought against these lows here this morning. Kind of a fun trade. I mean, if it craps out, I'll just walk away. No big deal. But, you know, you guys are probably curious what I do in the market. How, you know, what does a half decent risk look like? I got to tell you, that's pretty darn interesting story. And that's one of Kevin's. So I think that was one of yours, wasn't it? Anyway. So that's something I did a little bit with my money here today. Picked up a little bit of that. Ooh, 349. Come on, give me a fill here before the end of this video. That would be awesome. Actually, and I think I said, you know, hey, I'm not here to argue. I'll take the profit if they want to give it to me. But here's a really good example. PRPO, and actually I tweeted out the tweet. Did the wrong symbol in the tweet, of course. What an idiot, Brian. But hopefully everybody can see this really isn't rocket science. It's the same old shit that I do in, day out. So, you know, my double level here off of, I think my cost was, I think it was 76. I seem to remember that number. But anyway, it was about $1.52. I actually had orders up at $1.65 yesterday, so I was lucky I got a fill up top here. And it's just that simple, banging out doubles now. Basically, I'm sitting on free stock. I don't know. I mean, you tell me, does this thing have any room to run up here at all if they ever get their act together? Hey, this thing used to be $10,000 a share. I mean, obviously, it's a rolled back stock, so that's probably not relevant. But still, I mean, even if we just take this range from back last May, I mean, that's ridiculous. You know, could you see it move up here to $4 or $5 a share? I think so. So hopefully everybody can understand the logic behind this. And, you know, I just got paid. Ding, 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 ding. Thank you very much, Mr. Market. That was awfully nice of you. So, you know, that it's the business of trading. It's what I do. You know, kind of like the talk of the broader market. Just, you know, the gold never really sort of got any traction there. Bonds, same thing. Now up against these highs. Are we in a new trading range where the old bottom of the trading range is now the top of the trading range? That does happen. Stocks floundering here, just sort of sitting there as coronavirus cases explode. And now the situation, you know, now the U.S. is caught between a rock and a hard place. Because the prudent thing, good leadership would have been like, all right, you know, 1920 Spanish flu, this was really bad. This is going to take probably a good year to get through this. We've all got to work together. Governments are going to have to float a whole shitload of new debt to get through this. And probably best that we all start wearing masks and social distancing. Let's keep the crowds down to, less than maybe 50 people or whatever. But we just had absolutely horrific leadership, in my opinion. I'm sure I'm going to get a ton of bad comments about that. Fuck you to the masks. I'm not wearing a mask. I'm going to take whatever drugs I think are going to work. They might kill me, but so what? I'm smarter than the doctors. Let's screw it. We got to get these economies back open. Who cares about the medical data? And, you see what's going on in the southern U.S. right now. It's tragic, I have to tell you. And the worst part about it is, this is totally I told you so shit. But the problem is, the moment you say, I told you so, you're going to start a fist fight. Because the people that know that the I told you so's were right, their only response, of course, is frustration and anger. And this could spill into more rioting and fucking, but really it all comes down to just really shitty leadership. So anyway, it is the world that we live in. Good luck in getting through 2020, folks. This is going to be tough. As for crypto, I still think to a certain degree crypto is very much a risk-on proxy. So I don't think it should surprise us that things like Bitcoin and the shit perps and the Ethereums and the Litecoins and all that, if the broader market is like, God, we're panic dumping here, it shouldn't surprise us. What I will say, though, is I do find it really interesting how Bitcoin, in my eyes, is still, I think, a leading indicator. Because if you look at something like Bitcoin on a daily, and you look at what the S&Ps, let's see if I can do this. There's the stock market up top. Here's Bitcoin down below. And I think that you could basically surmise this rally peak corresponds with that rally peak. This sort of consolidation corresponds with this consolidation. This dump that's just starting now corresponds with this dump. And I wouldn't be surprised if the stock market has to rally right back up to the top of the range. Remember I showed you that SOX index. It could easily rally back up top there. The NASDAQ is still ridiculously strong, just exactly like Bitcoin did. And then I think there's going to have to be another dump on the other side of whatever consolidation this is. So I still think Bitcoin's leading the whole damn market here, believe it or not. So what the hell is Bitcoin doing, and what's the prognostication? Still thinking A, B, C, D. So my initial objective here would be sort of this 8,600 area, which again, I've sort of said this repeatedly. I think that this trading range here basically has us trapped. Notice the bottom of this channel that's working here. The midpoint is basically right against that tail low here. So if we did just fall out of bed here, you're going to see 1.618s, what I like to call the parking garage. My hunch is price is probably going to hold and find support against that channel line, which again would just be nothing more than a test of that key low. Lower highs and lower lows defines a bear. I mean, let's not sugarcoat it. If anything, this is a really important clothesline level here. Probably we don't want to see a close. If you're still thinking, maybe this is a bull, maybe this is a bull, we really don't want to see a close below this level here. That was 92.6426, and this low here was 92.86. So not quite a clothesline breakdown again. So that's encouraging, I suppose. And you can see the real fight going on here. So like overnight, first thing out of the gate, overnight, stock market, of course, tanking. You can see the corn rolled over here. And now they are desperately trying to bring it back. And also, too, fascinating how this conversation is right off of this trend channel. So my hunch here is that if we can accept back above this channel, then actually we can draw reload zones. Something like that. So let's see what we got here. So we banged into 50%, formed an inside bar, trying to work our way back up. Really, this area should be sort of like 38.2 of this entire range. Are we going to accept back above 38.2? And if so, then probably the odds are through the weekend we can rally back up into this short zone, which is the original market structure top. You know, this is a good example if you're an institutional player and you want to try and short, it's not a good idea to be shorting down here. Ironically enough, you want to let the market sort of stabilize, put some sort of floor in, work its way back up, and you're going to be hunting, shorting right off of that level right there, right? The original structural fail. So don't be surprised if through the weekend actually they work it right back up into this area. That wouldn't surprise me one bit. But first, we got to get through this channel. So you can see this was the original downtrend channel. And I think this is defining resistance right now. So, you know, if you want to have a reference, what to watch for over the next day or two, keep in mind there's a big CME options expiry event coming out tomorrow. So there could be some fireworks around that. And I think a lot of the futures, quote unquote futures, forwards contracts on these various crypto exchanges are also rolling over as well. So this could be a really choppy period in here. You know, looking just quickly at this level, if we go, boom. Yeah, what a surprise. So you can see the resolution of 38.2. All level oneers watching this is exactly what we did last week. You can, in essence, make the argument the market is trying to resolve this 38.2 level. And if it can, it's probably some kick-ass head and shoulders, like so. And the way you measure head and shoulders move is the top of the head all the way back to the neckline, and project that off of the neckline. Should we resolve 38.2 higher here? And that gives you your target. Gee whiz, look at that. Right back up into that original structural level. And you know Brian, he absolutely loves 78.6's candle body highs, trade location, right? So what a surprise. In a weird sort of way, you can almost see the market's telegraphing itself here. So probably the simple message is, if this is a W, then probably look for a nice rally back up to 95, maybe even 97. If, however, this turns into an M, then probably think bot continuation trades, and you can start thinking bear A, B, C, Ds. And actually, that's probably what that level is. Whoops. What did I do there? Boom, 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 boom. And boom, 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 boom. So, I mean, I'm not making any predictions here, but in essence, head and shoulders, 9,600 we'll call it, maybe 9,700. 78.6 is 96.26. That seems logical to me. And if we M out here and fail and can't resolve back above 38.2, can't get back above this trend line, then you're probably looking at about 8,500 to the downside. So there you go. All right, everybody. I think we'll leave the free offering at that. Sure hope you got some value out of it today. Keep those open orders working. Bang out doubles where you can get them. Don't take any wooden nickels. Remember what your number one job as a trader is to do. And, oh, by the way, have yourself a wonderful day. All the best, and bye for now.